This is Agriculture Today, and we're glad to have you aboard here for our Friday edition. The grain markets of interest, of course, and we'll talk of what's been going on that front this past week, quite a bit, as a matter of fact. Dan O'Brien is aboard, grain market economist, K-State Research and Extension, from his office in Colby, Northwest Kansas. Dan, you, though, have been on the road quite a bit since we last talked at various grain marketing workshops around Kansas, one of which took place in the central part of the state this past week, and it focused on soybeans. Bringing that up because the hot market of choice this week is, in fact, the bean trade.
Making contract highs for the March 2022 contract. Chartists pay close attention to where high prices had been in the past, and here back in late May, early June, we got up to just under 1448 thereabouts, 1446, and we beat that here actually on yesterday's close. So, and as we closed in soybeans at 1448 and a quarter. So, anyways, pretty strong markets. Really questions of where all this goes. A combination of factors such as dry conditions in South America, Argentina, Brazil, Paraguay, and actually Paraguay has a larger percentage hit based on the USDA numbers than even those other two. So I guess that those issues, the issue of weaker competitive position from export competitors in terms of just available supplies on the one hand, and add into that questions about soybean and corn acreage, with really vacillation, I guess is a nice polite word to say, for people going back and forth guessing from various private sources what acreage of corn and soybeans will be. Initially, without even blinking, we were looking at expectations of, say, 3+ billion bushels of soybeans to be planted this year. And now you've had some other farmer-based surveys, Farm Futures, et cetera, that have moderated that a little bit. It is quite the conundrum, quite the question to ask. If we are going to plant lots and lots of soybeans, and why did we have this big battle over fertilizer prices for corn and other feed grains? So I did at these meetings follow Dorivar Rees as he gave his presentation. I dare say his presentation was more important than mine, as he was dealing with these fertilizer challenges. And as an economist, I look at things from a marginal benefit and marginal gain point of view. And even if people were able to get as much enough high-priced nitrogen fertilizer for their corn to plant to their recommendations, what's lost now, I think, will be any normal 5 or 10% excess factor that people had that positioned them for, hey, maybe tremendous weather would come along and we get more yields. And a lot of disagreement amongst people in Kansas as to whether folks are caught short on their fertilizer or not. Did they get adequate supplies to get, and had already put that in the ground in the fall, or did people step back and decide they weren't going to pay those high prices and re-enter that market in the spring? And just a surprising amount of disagreement as to what actually happened. We actually need a survey on that, but if we did, nobody would probably answer it because of neighborly considerations and all of that. So what a challenging situation. And you can bet that yes, I'm thankful people listened to some of what I had to say, but they were glued to what Dorivar was talking about as he was looking at nitrogen, phosphorus, and how to survive this year in a time of just extreme high fertilizer prices.
And in fact, later on in the broadcast following our visit, Dorivar will be Mike's side to talk fertilizer strategy with us and some of the things he expressed at that workshop earlier in the week. The corn side, as far as the trade this past week, well, give and take, it faltered a bit, did prices, but there are some positives within all of that market. And one of those is the price of corn, how corn is being priced, should say, at our ethanol markets here in the state of Kansas. Those are quite strong, you say.
It's the strongest in the United States. We have, based on the report for Thursday, January the 27th, that the range of prices at Kansas ethanol plants was 642 to 669. And on the high end, the next highest state was Nebraska at low of 607, 657. Some other states, Missouri also at 622, 662. So it seems like that between Kansas and Missouri, that we over time have been having some pretty strong ethanol plant numbers, but I wouldn't say we're in the center of the ethanol world at all. No, that's up in Iowa and Iowa and Illinois and Minnesota, southern Minnesota, and you're looking at prices in Iowa running from a low of 592 up to 641, and we also have the strongest DDG prices in the country. And now, if you're a livestock feeder, you may not be that happy about that situation, but yet we have that strong a demand is where that comes about, given our feedlot sector. Dry 10% distillers grains had a price range of $230 to $275. The next highest numbers on the high side were, I think, $249 on the high end in Missouri and $235 in Nebraska again. So, and anyways, general indications that Kansas ethanol plants are still functioning, still going forward. There's some worries about accumulation of stocks and some slowdown in the profitability in those plants, and that's no doubt true. But at least as we look in our neck of the woods around Kansas, we're just by indication of what plants are willing to pay for corn and what they're selling their byproducts at. There's still a pretty strong, hot, healthy demand going on around in our state.
And you note in your write-up this week on the markets that there's reason for bullishness long-term in the corn export trade.
Yes. The problems that we are seeing in the soybean market in South America are they're continuing, and they're rolling over from soybeans over to corn with at least questions about what will happen there. And it shouldn't be forgotten that as Russia and Ukraine have their issues that they're potentially going in conflict over, or at least throwing a lot of dust in the air, that China has gotten an awful lot of its corn from Ukraine. So what an interesting dynamic, as here you have China having built solid trade ties with Ukraine in an effort to not be so dependent on the United States and some other suppliers, or at least to diversify their supply base for their imports. So you have that happening at the same time. You have this move on the part of Russia to exert some control. I hope I'm not saying that wrongly, over Ukraine. So what a challenging situation. Of course, the politicians are involved. They have public statements one way or the other, and diplomats being recalled, and all manner of issues. But the big point is that you look at the wheat market, anything that happens in the Black Sea area that disrupts trades, a big deal for wheat, and part of the reason why we're seeing on a down day a close of 793.5, and that's on a down day, down 22 cents for hard red winter wheat, and it just shows the strength we've been having in that market. So you have that part of that international equation, and still questions of where U.S. trade is going. I would just add a couple things. The pace of corn exports has jumped, partly because of these same issues. We had a week ending the 20th of January at 56.6 million bushels, and that's actually ahead of the pace for about one of the first one or two times that's for these weekly numbers that we've been watching, ahead of the pace to actually meet the USDA's projections. So that's a big deal. You're looking at potentially tighter ending stocks if that sustains. For soybeans, 59 million bushels a week, and need a pace of 23 some to meet the USDA's projections. So that looks like it's going pretty well. On the wheat side, you had for all U.S. wheat, exports of about 13 million bushels. We need actually 21 to meet the USDA's projections. So that's the conundrum of wheat. The prices are wonderful, but the export pace is okay. I would add for hard red winter wheat, where we're at in our part of the country, 4.7, 4.8 million bushels this week. We need a pace, by my calculations, about 9.2 to meet the USDA's projections. So you've got a strong but risky market. Strong in the wheat based on international worries and concerns, but the actual underlying performance is okay. But we'll have to pick it up to actually meet the promise of the market.
And just a quick final thought on wheat. Out your way, it did snow this week. As we'll hear later, though, from K-State's Chip Redmond, the moisture relief realized from those hefty snows may not be all that much. So the market needs to perhaps take that into account as it factors in that development.
I'll say this: it may not have been much, but it's better than dry blowing dirt. I haven't heard one farmer that said, well, that was complaining about having the moisture. So I'm sorry, Eric. I guess I turned local for that one moment. My office is in Colby, and they did get a lot more snow in the Scott City area, more the west central part of the state than we got to the north. So, and every bit of it's welcome. I never heard anybody complaining about scooping snow on this one.
Be not misled, folks. That was a very welcome moisture event for Kansas out in the western part of the state earlier this week. Dan's notes on the grain markets can be found, as always, each week at agmanager.info. Gets into greater detail on the market trends, what's driving those. Agmanager.info. Dan, until we talk next Friday, many thanks to you.
Thanks, Eric. Take care.
He's with us each week is Dan O'Brien, grain market economist, K-State Research and Extension, joining us once more from Colby in the northwest part of Kansas. We'll be back in a moment on Agriculture Today.